All right. I think we are now officially on. Fantastic. All right. So I just want to say welcome, Sarah. We are going to do a fun little conversation today to talk about the market and how to win in this market. Because buyers, if you're buying right now, it's, I won't lie to you, it's challenging. And so it's important to work with a really great realtor and a really great lender. And today, Sarah and I are going to dive into kind of what we're seeing in the market, what to expect. Is now a good time to buy, and answer any questions that anybody has. So we're live streaming on Facebook right now. Of course, we're on Zoom. And so we're just going to get into it. I'm going to go ahead and share my screen.
It's going to be fun.
Yeah, it's going to be fun.
Helpful to buyers too.
Yeah. So I am recording this as well. So anybody who can't make it, we can email to our people. So that'll be good. Let's go ahead and turn off this. All right, perfect. Can you guys see my screen? Yeah?
Yep.
Okay, awesome. So how to win in this market, helpful tips to help buyers win in this competitive market. That is the discussion today. And, the first thing that people ask is now a good time to buy? And I would say, yeah, now is a good time to buy. Absolutely. And, the challenging part about buying right now is because it's a good time to buy, everybody's trying to buy. And there's way more buyers than there are inventory, which creates a very competitive situation, right, Sarah? I mean, we're just seeing multiple offers.
Yep.
And it's bonkers out there.
It's
And
crazy.
so I think that's why buyers start to feel like, oh my gosh, should I just wait? Because it's freaking crazy. It's nuts, right? And really, if you wait, if you think about it, what are you really waiting for? You're waiting for rates to go up, right? Because that's going to thin out the buyers, which only just makes it more expensive. And so it's competitive as it is out there, and as tough it is out there. Rates are still relatively low, and I'll have you talk about those in a minute, but I know they're starting to creep up. And as they creep up, even by 1%, you're going to lose 10% of your buying power, which means if you're approved today at 600 and the rates jump 1%, you're now approved at 540, right? So that's a big difference in house, right? So can you talk a little bit about what we're seeing in rates and inventory and values and some things for buyers to think about?
Yeah. So, I mean, on the rate subject, it's so interesting to me, like what you were talking about waiting, because like you really have to look at what is the cost to waiting. Because, unless we're in a recession, which we are not, and there's zero indication that that's happening, you're basically waiting to spend more money for either the same house or spend the same amount and buy lesser of a house down the road. Because as rates increase, like you just said, it decreases your buying power, and values aren't going to be going down, so you really have to weigh it out. So yes, it's a tough market right now, but it's tough for a reason, because it's a great time to buy. Interest rates have increased slightly, and it's a conversation we're having with a lot of buyers, because it's really just about changing expectation. Interest rates were under 3% a few weeks ago, and they had been that way for a year, and that's what everyone's expectation is. But rates have creeped over 3%, and they've been going up and down and staying in the low threes. So it just depends on, your specific situation. But the reality is, if you look at interest rates over a 10, 20-year span, they're historically low. They've still never been this low ever in history. And so it's still a fantastic time to buy. Getting hung up on like a 0.25% different in interest rate is, it's only going up. So it's really like, why get in the weeds on that? Right? Because the rates are still so low that your buying power is so much more greater than it's going to be as they creep up. So I don't know how much you want me to get into interest rates right now. Do you want me to talk about like the Fed rate and stuff?
Yeah. So the Fed made an announcement on Wednesday, yesterday, and I think it's just good to quickly address it because, as we were talking just before the call, what we're seeing is you read an article that says the Fed is going to keep rates low. But
Yeah.
as I know you'll be able to explain better than I can, Fed rate isn't the same as a mortgage home loan rate, correct?
Correct. So yeah, it's so misleading to consumers because when you see a headline from like CNBC saying interest rates are going down, the Fed's keeping rates down, they're talking about the Fed rate. The Fed rate is what banks lend to each other on. And so that's for like short-term debt. You're talking about auto loans, credit cards, lines of credit. That affects those interest rates. But the Fed rate has no bearing on mortgage rates. Mortgages are tied to the bond market, mortgage-backed securities, and that's what mortgage rates are based on. The thing is, I don't have a crystal ball, but unless you're watching analyst reports on people that are in mortgages all day long, like analysts just looking at mortgage-backed securities, they know what's going on. They have a pulse on the on what's going to happen with rates. It's a lot different than what's going on just with the Fed rate. But as any good news comes out as far as inflation increasing, anything good in our economy, those types of things have a negative impact on mortgage rates. So as things are opening back up and we're coming out of this quarantine we've been in for so long, and there's all these positive things happening, you're going to see interest rates increase because that's going to have a negative effect on mortgage rates.
Yeah. I mean, none of us have a crystal ball, right? Back in the day, it seems like the Fed would like to get the rate somewhere around 6%, 7%. I mean, I remember when 5% was like amazing, right? And now we've been 5% seems high at this point. Because we've been historically low for so long. I mean, recently it's been in the twos, which was crazy. But even before that, it was in the threes and in the fours at most. Do you have any indication that as house prices go up, you think that's going to just historically keep rates a little bit lower than maybe they would have risen to in the past just because of home prices? Or do you think it's...
I think so. I mean, they're buying mortgage-backed securities like crazy to try and keep our rates down. But what everything is pointing to is that rates are going to kind of stay where they're at, maybe go up or down a little bit throughout this year, but they're going to stay low. And if we do head into some sort of a softening of the market, where then rates could come down a little bit again. I don't see us getting under 3% again, but I don't think rates are going to continue going up in such a fashion that like all of a sudden we're like in the mid fours that quickly. It's going to be a slow progression.
Okay, perfect.
With maybe a slight recovery in there,
Yeah.
But we'll just have to wait and see because we've never been in a situation like this either. So.
Yeah. And so that's driving, I'm seeing the same thing. That's been driving the market for as long as it's been. And, home price, that's what's keeping home prices going up. And so, what I've been telling our clients is that if you wait a year or you wait 2 years, rates are only most likely going to be even slightly higher, still higher.
Yep.
And prices are going to be higher. So, really what you're going to be experiencing is you're going to have a more expensive situation than what you have today. And the only way I can see, there's only two things that can happen. One, a flood of inventory, but even still, we have such little inventory right now.
Yeah.
We have like 10 days of inventory. So we have such little inventory that it would take a massive amount of inventory even to get back to a neutral, right? 4 to 6 months. It's not is insane, from a competitive situation. I think we're probably going to be in this competitive situation for a while. And if you're waiting to try to catch lightning in a bottle, I think you're going to be in trouble. If you try to catch lightning in a bottle, you're going to get shocked, right? So I just tell people, hey, go for it. And I bought in what you would consider, I guess, the wrong time in 2008. The market had already started to go down, and it tanked even further than that. And I bought for $360 in Federal Way. That was 12 years ago. That house today is worth about $625. So
I did the same thing, right? I bought in 08, market tanked, immediately lost like $100,000. But now that house is worth, $650, $675. So the reality is, wait, I don't know if you tell people, but I always tell people it's always a good time to buy. You'll never lose in real estate unless you have to sell. You're forced to sell in a down market. As long as you can hold onto your property, you'll always make money in real estate. So I guess the answer is yes. You should buy now.
That's what
Right?
I love. That's what I love about real estate,
Yeah.
And the other thing that's different this time around, it's not '08, is if you've purchased in the last 12 to 24 months, 24 months or beyond, you for sure have equity in your home.
Oh, yeah.
If you had to sell, you could. And
Yep.
that's the difference between what happened, what we saw in 9, 10, 11 after the crash. People just didn't have equity. They were, most everybody was in a zero down loan and they hadn't gained equity because at that time, equity was taking a normal 2 to 5 years, and now it's like, I bought a year ago and I got 100 grand in equity in my house.
Now
It's
it's
crazy.
like 2 to 5 months. You've got a ton of equity. So
Exactly.
yeah.
Exactly. Is there anything you want to talk about? We talked a little bit about inventory. Anything else you want to add to that or values before we move on?
I think we pretty much covered it. It's definitely a good time to buy.
Perfect.
Yeah.
Okay. So the question I get now is like, what should I do first? And what I always tell my folks is before we go out shopping, before we start getting excited about houses, we really need to get pre-approved first with a lender. And in this market, when we're seeing such competitive situations where we have buyers, and we'll dive into this a little bit more, but we have buyers that are doing, they're waiving financing sometimes, they're waiving appraisal, or they're putting a large extra down payment down on a low appraisal, doing all sorts of things. It's important. It's important not just to be pre-approved anymore, right? Pre-underwritten or even completely underwritten approved is going to help protect you. Can you kind of dive into what the differences are in those things and
Yep.
why it makes sense to maybe go all the way and get underwritten approved before making an offer?
For sure. So I think these terminologies mean different things for different lenders. That's the hard part as a consumer. You don't, people throw around these and you're like, I don't know what you're talking about. And also to one person, it could mean something to one lender, pre-approved could be very different to another lender. So this is pretty much how I look at it in a nutshell. Pre-approved is you've taken an application, you provided all documentation, it's been reviewed by a lender, and you're pre-approved to go buy a house. Everything looks good. Some lenders consider pre-approval just taking an application and not providing that supporting documentation. So pre-underwritten can mean a couple different things, but generally it means that you've gone through some sort of underwriting. It could be automated underwriting. You've provided all supporting documentation. Your income has been verified in writing from your employer. All the T's are crossed. So that's a really strong offer. But when you're all the way through underwritten, so underwritten and approved means your loan has been submitted underwriting. Just like if you had a property, that's the normal transgression, is it happens after you've been under contract, you go through underwriting, it comes out of underwriting, and then you're to the final stages of closing on your property. But in this case, you're doing it up front. So you're underwriting it based on a potential purchase price, like a to be determined scenario and address of a property. It goes all the way through underwriting. All your financing contingencies are met on your approval. So when your loan's approved, there's usually conditions of that approval. And so those conditions are met and cleared. So literally the only thing holding you back from closing on the loan is having the home. So at that point, you now are you can waive financing, knowing nothing could go wrong with your financing. You also can now close in 15 days, depending on the lender. So every lender is different. With my team and at Fairway, we easily can close in 15 days or less when you're underwritten approved, because that's a big time portion of the process for the lender. So you've done all that and you can close really quickly. It makes you, honestly, Travis, don't you think it makes you look pretty much as good as cash?
Yeah. Well, here's an important thing. A lot of lenders won't do it. A lot of lenders, they just won't do it. They won't take you all the way to underwritten. They just won't underwritten approved. They won't do it. And in this market, I mean, I've had a couple of folks both on the listing side, where buyers are buying my listing. So just sold a house in Ballard. I would say downtown Seattle, and on the east side, I'm seeing this more than ever. So we're seeing where people are just waiving financing and waiving appraisal and everything. So they have no contingencies. They're giving us $30,000 to $100,000 in non-refundable earnest money. If you're a buyer that's doing that, you better be underwritten approved, because you can't risk, 50 grand, 100 grand, 30 grand, whatever, even 10 grand on waiving those types of things. And then for some reason, the underwriter, snags something, checks,
Yeah.
checks, and it comes up, and all of a sudden you can't close on the loan, you lose that money. So, in competitive situations, it's best to do that. And you look a lot better. And even if you're not waiving those things, you still look a lot better.
Still look better. And the thing is, so you're right, not all lenders do it. The reason that not all lenders do it is generally because of capacity. So they don't have the infrastructure, so you make sure that you're talking to a lender that has the team and the support to be able to provide this level of service to you. We do it on all of our clients. If they're actively shopping and making offers, we get them underwritten approved, because we want to help you win. Why would we not? And we have the infrastructure to do it. When you're submitting your offer, you don't have a pre-approval letter anymore. It doesn't say pre-approved, it says underwritten approved. So it looks amazing. It stands out in an offer because no one else has that letter. Like, no one else has that letter.
Yeah.
So,
and then like you said, you can close in like 12, 15 days, which is
easily.
basically, that's like cash. So
because there are incidences, like it depends on the client and what they're putting down. But if you're putting 20% down and you are in up to a high balance conforming loan amount, there's a really good chance that appraisal is not even needed. So if an appraisal is not needed, you're underwritten approved, which appraisal not being needed is subject to your credit profile and the property. And you wouldn't know that till you're under contract. But if it's not needed and you're underwritten approved, I mean, easily you could close in 10 days.
yeah.
Yeah.
I love that. Yeah. And that's cash. I mean, cash can do the same thing. And so you may be competing against a cash offer, or you're competing against other finance offers, and that just makes you look really, really, really good. So that kind of segues perfectly into what to expect from this market. Who are we competing with as buyers? Who are the other buyers we're competing with, and what strategies are they using to win? So I'm going to dive into this just a little bit, because this is my arena and what I see every day. A couple of things. One, we're seeing houses sell, depending on the area, anywhere from $25,000 all the way up to $400,000 above asking. I mean, that's insane, right? In the South King County, North Pierce County, it's usually $25,000 to $75,000 above asking. So for buyers that are looking, I do not recommend that you start your search right at the max purchase price, right? You're approved at 600, you're approved at 500, 450, whatever it may be. We're not looking at houses at 500 if you're approved at 500, because guess what? That house is probably going to sell closer to 550 or higher, 525 at the lowest. So we're going to start your search a little bit lower than that, so that we have room to compete. Most everybody now is paying their own closing costs. I was just trying to think. I haven't seen a situation where a buyer has been able to roll their closing costs into their loan in probably the last 8 to 12 months. It's been a while. And so you have your down payment. So maybe you're doing down payment assistance, right? And so you have a grant and you're not coming out of pocket for your down payment. You still want to save up some money to be able to cover your closing costs, which are your loan origination fee, your prepaid interest, prorated taxes, and homeowners insurance. And those are the things, and your half a title and escrow, excuse me. Those are the things that you have to really cover on your own. It's usually about 3% of the loan price, depending on, how big of a home you're buying and all that, as far as price. That you want to be prepared to pay for, because most buyers are paying for that themselves. If you can't do that, it's going to be really hard to buy in this market. It's also going to be extremely challenging if you're not at least prepared to put 10 to 20, really 20, but 10 to 20 or more above a low appraisal. So almost every buyer right now is coming up against competition where they're not losing on price, they're losing on terms, right? So
Yep.
let's say, they're approved up to 500. They're interested in a house that's selling at 450. The highest offer is 475, and we come in at 500. But there's an offer at 475 that's offering a $20,000 additional payment, which we call a 22 AD, above above a low appraisal if the appraisal comes in low, and we're not, right? But we're offering $25,000 more, but we don't have a 22 AD. We're not offering an additional down payment. We're probably going to lose that offer. And so we'll get into what a 22 AD is in a little more detail here as we get talking. But I'm seeing that, and we're preparing our clients just to be prepared for that. So if we don't have those things, there's a couple options. One, we find a way to go get them, right? Either through a family gift or something like that, which we do, or we look for off-market properties for our clients. And then you don't have to compete, right? Or you find a property maybe it's not presented very well and it's priced too high for its presentation, and it's been sitting on the market. It's rare in this market, but it does happen. And you negotiate with that, and you don't have to compete, right? But if you're competing and most houses are getting 10, 20, 40, 30, 40 offers. And so when you're competing with that many people, that's what you're going to be up against. You're going to be up against that. Almost everybody's waiving inspection. We'll talk about how to stay protected and being able to do that and still stay protected and have a chance to do an inspection. But most everybody's waiving inspections, and a lot of people are doing non-refundable earnest money, released immediately to the seller. So, being prepared and knowing what it's going to take to at least put yourself in position to win is huge, because the last thing you want to do is, I'm seeing some clients that now are coming to us who have been working with other agents, and they lost 16, 17 offers over the last 3 or 4 months. They're just getting killed out there, and they're discouraged. And it goes back to that first question: is it a good time to buy? They feel like maybe we just shouldn't do it. And really, what they need is somebody that knows how to get an offer accepted. And we might lose 3, 4, 5. The most I've lost is 6 before we got the right house. But we'll get the right house. So that's what I'm seeing. What kind of things are you seeing, Sarah?
I think you really covered it, and just to add to what you said, I think that it's important to make sure that not do you just have a really good realtor that's going to explain all of the things you need to do to win in the market, but that you have a really good lender that is creative in finding ways to help you get into a home if you don't necessarily have all of those things. Like, a couple of good things to know is when you're talking about unreimbursed earnest money, that is money that comes off your down payment. It's not in addition to your down payment. But it's just a little bit riskier, saying, like, you can have it no matter what. So making sure your financing is solid is really important when you're going to put that up. Also, if you don't have all the money for a 22 AD, your closing costs and your down payment, there are ways that you can take advantage of. If you qualify for a down payment assistance program, use the savings you do have to maybe do a 22 AD and closing costs, and then use the grant program for your down payment. So just making sure that you're talking to a lender that's looking at all available options and working with your agent together to make sure you win is really important.
Yeah. And then also, when you do go to, and we'll dive into this here in just a few minutes, but when you do start, doing some of those things, like maybe you get a gift we just had a client who was approved at 305, which was a really tough purchase price it was down south. It was in Olympia in Lacey, still a tough purchase price in there. And she ended up getting family members to give her, some extra money, right? But even when you do that, you have to talk to your lender and make sure you're working with a great lender that understands, first of all, how to not deposit that money or where that money should come from, which
How to get the gift. Yes.
how to properly get the gift, because all that can create problems for you. And then also what that really means in terms of, all right, well, I got $50,000 now, gift money. Well, how can I use that towards increasing my purchase price, but also maybe use some of it for a 22 AD or something like that, right? And so working with a great lender and a realtor that can help, make sure you don't use it improperly. It's like, great, we got this tool.
Really strategize.
Yes. Yep. Strategize and make sure you use it to the most effective the most effective way possible, because you can shoot yourself in the foot. You definitely can do
You
that.
can.
Yeah.
Yeah.
Cool. Let's jump into the next thing here, which is how to be aggressive and still remain protected. So, we're talking about this already, as we've been talking about what things, your lender and your agent can do to help you succeed. One thing that's really important to me when I'm representing buyers and to my whole team is keeping our buyers protected, right? And what I mean by that is, like, when we put earnest money down, like if we're putting non-refundable, or if we put earnest money down that is refundable, we want to make sure that's protected to the point where we're comfortable with the situation. So I mentioned a lot of people are waiving inspection. So one trick and tip I can share that we do is, if you're buying a home in an HOA community, you have what's called automatically, you're going to have an HOA contingency. The seller has to provide you with the HOA docs. It's just part of the contract. And you have 10 days to review those, or 5 days to review those docs. They have 10 days to get them to you, and you have 5 days to review them. And if for any reason you just don't like them, you don't have to say why. You just don't like it. Say, nope, this HOA ain't going to work for me. You can back out and get your earnest money, right? As long as you haven't made it non-refundable. That's called a get out of jail free card. Same thing with a home inspection. You do a home inspection. You don't even have to do a home inspection if you're within your contingency time frame, which is usually about 5 days in this market, 4 to 5 days. You can back out for no reason. You don't need 2 get out of jail free cards. You only need 1, right? And so from an offer presentation perspective, most agents aren't paying attention to that HOA contingency. So if they see that you waived the inspection, they're excited about that. They're not thinking, oh, you could also get out on the HOA. It's just not something that's on their radar. And we're able to put in there that we can still do a home inspection within 5 days for our own informational purposes, but it's not contingent on the offer, right? And so that's how we've been winning and beating out 20 offers in some cases, is that we waive the inspection. We still do one. And guess what? If something pops up crazy that's a deal breaker, which we haven't had yet, but let's just say it did. Let's say we get under there and it's like the foundation's a mess or whatever. It's a $40,000 project. Guess what? We have the HOA, we bail on the HOA, and we get our earnest money back. So we're allowing our buyers to stay protected, but stay, aggressive in their offers. Now, we can also do things like pre-inspections. And sometimes in some areas, sellers have already done the inspection for you. That happens a lot on the east side, Issaquah, Sammamish, Snoqualmie, those areas. We're seeing that quite a bit. But in a lot of areas, it just isn't common, and so if the seller's provided a pre-inspection, most of the time a buyer is willing to go ahead and just accept that, review that, and accept that. And I would encourage any buyer to do that. Or if they can do their own pre-inspection, which means maybe they have an offer, maybe it's Friday, we're seeing the home, and they have an offer review date next Tuesday. So we ask the seller if we can get in on Monday to do a pre-inspection so that we make sure there's nothing majorly wrong with the house. We're still protected. And now we can make an offer. Maybe we do make that earnest money non-refundable because we've already seen it, right? So those are some things that we can do to stay protected, at least on the agent side of things. Is there anything that you want to add to that, Sarah?
I think the only thing that really plays in for the lending side of being protected and aggressive is getting pre-underwritten. Because a lot of people are waiving financing without being pre-underwritten. I would say most of the times they're not underwritten approved. They have maybe gotten a solid pre-approval, and they're like, yep, we're going to waive. I see it all the time. Waive financing, 100,000 unreimbursed earnest money, crazy things. They might have no problem. They probably feel really confident about their financing. But honestly, as a lender, it's my fiduciary responsibility to take care of my client. I would never advise someone to waive financing without being underwritten, because there's just things you just don't know that could come up. And so the way to be aggressive is to be underwritten, completely underwritten. And then you can be really aggressive on your close date. You can waive financing and there's no potential issues.
Yeah, I love that you said that, because not being completely underwritten approved and waiving your financing scares the crap out of me.
It gives me night sweats.
Oh my God.
Don't like it.
I know people do it, but that's just like, it's like playing Russian roulette, you know? It's
Yeah.
just,
And then they're like, okay, so we did this, Sarah. And you're like, oh God, a lot of pressure. So I just would rather, it just protects everybody to do it that way. And if you've got a great lender, I mean, we didn't say this, but when you go through underwriting, like with my team, it's not a long process. You're talking a week. So you can be out house shopping, making offers with your pre-approval letter. And then the next week you're making offers with your underwritten approved letter. It's not like it's slowing you down or anything.
yeah, I think that's an important point. And the other thing is like, the thing that scares me is like, I would say most lenders and realtors aren't having this conversation with their clients. I
No,
mean, they might be having the conversation like, this is what
you have to do to win.
yeah, this is what you have to do to win, but they're not doing the protection piece, and,
Right.
and they just don't know. I don't know that they're doing it maliciously. A lot of times they just don't know, and the lender maybe that they're working with won't take them all the way through underwritten,
Right.
and so they just think, the lender says, oh yeah, you're good, you're solid, but they don't really have everything, right?
Exactly.
And to a consumer, you say I'm good, I'm solid. That means I'm good, I'm solid. Nothing bad's gonna happen. And yeah, that's risky.
It's risky. Yep.
Okay, cool. What is a 22 AD and how does it work? Why do sellers pick offers with 22 ADs over offers without them? So I'm going to explain it real quick. And then Sarah, I know you've got a little bit of deeper dive into like what to pay attention to if you do one.
Mhm.
So a 22 AD stands for additional deposit or additional down, really. What that means is, with offers going so far over asking price, the asking price is the starting price. We said that earlier, minimum $25,000 to $75,000 or more over asking is what we're seeing homes sell for. So with that going so far over, sellers want to be confident that whatever offer they agree to, they're going to get as close to that price as possible. And so what a 22 AD does is say, hey, if your appraisal comes in low, Mr. and Mrs. Seller, I'm going to give you an extra up to an extra $20,000 all the way up to our purchase price, right? So let's just say, the purchase price is 500 or 500. And the asking price was 450. Let's say the asking price was 450, but we came in at 500, and we say, look, if the appraisal comes in low, we'll give you up to $20,000 over the low appraisal in addition to our down payment, and so we'll cover it for you. Now, that's pretty solid. So that means the appraisal has to come in at least at 480 or higher in order to still realize that $500,000 purchase price. If it comes in at 460, well, at least you still got 20 grand and you're at 480, right? It's better than having to sell it at 460. And so a seller's looking for that. So as I mentioned earlier, if there's two buyers and one's at 490 and one's at 505, but the 490's got a $20,000 AD, 22 AD, and the one at 505, maybe they have a $10,000 one, they'll probably still lose, right? If the asking price was 450, they're probably going to go with the 490 one, because in order for the 490 to be worse than the 505, the appraisal's got to come in at least at 485. And that's a gamble. You don't know it's going to come in at 485. If it comes in below 485, they're not doing any worse than 490, right? So those are the things that they're looking for, and why we tell our clients that if you can find a way to get cash for that, then it's going to help. Now, the truth is, the appraisal might come right in at 500, and if it does, you don't have to spend that money, that extra $20,000. You don't have to do anything. You don't have to pay that. It's a gamble, right? And if you do put it in there, you have to be prepared to pay it. But there's also a chance that you might not have to. And that's something that I'll be able to help with, and my team will be able to help with on the buy side is, we run comps on every property we make offers on. And so being able to, educate our buyers to say, I actually think we're going to be okay on this appraisal. There's no guarantees, but it helps, I guess, set the stage. So the other thing about the 22 AD is you have to know how to use it properly. And Sarah, I want you to speak a little bit about some things to pay attention to if you are using a 22 AD, and things that could maybe hang you up and actually hurt you if you don't use it properly.
Well, I think as far as lending goes, it's something that um, like it doesn't get talked about a lot with the lender as much as it does with the realtor. And so I think fully understanding when you're making an offer on a property, like strategizing with your lender, okay, we're doing a 22 AD. This is what we're, guaranteeing in the case of a low appraisal. How would that affect our financing? Because when you're purchasing a home, if the value of the property comes in lower, your financing is now based on the lower price. So it's not based on what you're purchasing it for. It's based on the lower of the two, the purchase price or the appraised value. So now everything switches, and your down payment is now based on what it valued at, and you're gapping the difference between what it appraised for and what you're purchasing it for. So it can affect things because you have to, number one, have enough money to do all that. Number two, if you're putting a larger amount down, where it's just the strategy is going to change, because let's say you were putting 20% down, but you're guaranteeing a certain amount of low appraisal. And then now you have to switch gears because the appraisal came in lower. You could go to like 15% down and essentially bring in the same amount of money. There are ways to work around it, but you have to have that plan and know that going in. So just making sure you're strategizing. If you're putting, minimum down and you're doing a low appraisal, you're kind of stuck, and you need to make sure you have all those funds. But when you're putting more than minimum down, there are scenarios where it might not affect your cash to close that greatly if you're strategizing with your lender.
I love that. That's a great point. It would obviously affect your monthly payment, if
It
you're,
would. Mm-hmm.
and you might end up, if you're putting 20% down, not putting 20% down, you end up with private mortgage insurance and that kind
There's
of
there's a whole bunch of variables that you'd have to go in and weigh out your options. But knowing the thing about everything in life, I feel like, is about options.
Mhm.
When you know your options, like you have so much more opportunity to win at anything, because it's when you only have one scenario and you have to go with it, that you can, end up in a situation that's not as favorable. But knowing everything and deciding what makes the most sense for you. I
Yeah.
mean, going in eyes wide open and making an educated decision on your
Yeah.
finance.
And that's the key. That's why we always say get pre-approved first, get approved first, is because then we know what our options are. And we could talk
Yep.
about like all of that up front because we know what the market is already.
Yep.
And so we can be prepared. So when we go house hunting right out the get-go, we know exactly the tools that we have at our disposal to put together the most compelling offer possible to win. And I love that. Cool. All right.
Perfect. Cool.
All right. Last one here. Who you have on your team matters. Really what others experienced. I just want to share a couple quick testimonies that we've experienced recently. We've already kind of talked about the value of having a great agent, having a great lender.
Mhm.
And by the way, I saw you jump on, Alex. Hi, nice to see you. If you're kicking around the idea of buying, or somebody that's buying, maybe somebody that's been trying to buy and they're discouraged because they've lost 10, 12, 15, 16 offers. We see that. If there's an opportunity, we don't want to step on anybody's toes, but we do want them to know that it doesn't have to be that way. And I have a client right now that spent the last 4 months of last year getting their butt kicked on the market with another realtor, and expressed frustration to a friend who's a past client of mine, his past client of Emily and I. And he said, you guys got to call Emily and Travis. Like, that doesn't seem right. You lost 16 offers. Like, you call Emily and Travis. So they called us, and in a quick 10-minute discussion, I quickly discovered, I said, well, why are you losing? That was my first question. They said, I don't know. So what do you mean you don't know? So, well, our agent we don't know. We're not getting any feedback. Okay, that's not great, I said, well, what strategies are you using to win? Like, we're just writing an offer. I don't know what you mean. What do you mean, right? So it became pretty clear in about 15 minutes that they were missing some stuff, and so because of that, we talked a little bit about strategy and what we do, just like we did here today on this webinar, and they decided to jump in with us. They spent a month and a half, not even a month and a half, about a month and a week with us, and we got them in the contract. And I think we wrote 4 offers, we lost 3 and won the 4th one. And but even when we were losing, it was like we knew exactly why we lost, we knew exactly what happened, and it was, you know, the better offer won. And they could at least sleep knowing that, you know, they slept well knowing, okay. And typically we were number 2 or number 3. We were right there. We were right there. In fact, the one we won, we lost the house. The first buyer fell through, they called us, and we got the house. So that's,
Nice.
you know, and there, I mean, it's just so fun to see that, you know, and they just painstakingly were going through it in another situation that wasn't giving them much feedback, and they are so thankful for that. And so we're seeing that more and more and more as it's getting harder and harder to buy. I would argue that last year was actually easier than it is right now,
True.
just with everything. And so
Yeah.
yeah, you know, who you have on your team matters. And that comes from a real estate standpoint and from a lender standpoint. Anything you want to add to that before we take questions?
Oh, I just think knowledge is power, you know, and when you're working with experts that are more of advisors, then, you know, there's a lot of lenders and there's a lot of realtors, but they're not all experts, and people only know what they know. And so working with a team, like what you said, how you're letting them know, they know why they lost. They know they put their best foot forward. They lost because they weren't willing to go up, and they're okay with that.
Yeah.
Right. But they have all the information, and that's so important. It's the same in lending. You know, most lenders are going to give you a fee worksheet and say, here you go. Much different than like sitting down with a lender, having a Zoom meeting, strategizing, and being in a position where you're like submitting an underwritten approved letter, and your lender's calling the listing agent, you know, and winning the deal for you. Because the deals lately that we're winning, Travis, you can contest because we've done it, where the listing agent literally said it's because of financing. Like financing has a huge weight on whether you win or don't win right now. So just having both people and knowing that not all lenders and realtors are created equal, and you got to source out the experts.
I think you touched on something that I want to just bring into the fold. A couple of things. Yeah, strategy wise, we have all the lenders I work with, and you're one of my main lenders, Sarah. It's like you call. It could be 7 o'clock on a Friday night, on a Sunday night, whatever. Like you're going to call the listing agent and give them all the warm fuzzies. And I CC you on the offer. How the offer is actually written and presented matters, right? Like some agents literally send over every different addendum in a different attachment. And so the listing agent is like 80 attachments, and it's a mess, and they have to like fumble through it to figure it out. I'll just tell you, being a listing agent myself, that's not a winning offer. You know, I mean, I'm still gonna put it all together and figure it out and present it to my client, but that just it shows a lack of experience, to be honest. And so the offer is presented, even the way I have the offer structured, right? If we have an escalation clause, I throw that at the very top. If we're waiving the appraisal or we have a 22 AD, it's at the very top, and then boom, boom. We write letters for our clients, have pictures for their families, which is common. A lot of people have figured out how to do that, but a lot of people still don't do that, which is just mind-boggling because it's just what you should do. And so there's so many things like that I think really is it's the littlest things. I mean, we won one recently, and they said the biggest reason why we won it and why they didn't go back and forth to try to like inflate the offer, which they could have done, to be honest, is because of us, because the phone calls that we made, specifically, Sarah, the phone call you made, you know, and just giving them the warm fuzzies of like, okay, this is solid, because, you know, they want to pick an offer that's going to get them to closing, you know. I mean, of course, the numbers look great, and that's exciting, but the numbers are only great if they actually happens, right?
Yep. If it comes to fruition, it's all in the details. I mean, that's really what sets you apart in this market is the details, because there's a lot of offers, right? And so you've got to pick a team that is paying attention to those things.
Yep. So you got to be writing letters with pictures. I actually had a client say, are you sure, we should include a picture? They weren't sure about it. Right. And maybe they felt like they'd be judged or whatever. Right. And I said, trust me. And you know what's crazy? The seller said one of the reasons why they picked the offer was because of the picture of their beautiful family.
Oh,
So it's just like all these things, they work, and there's no specific magic bullet, but when you do all the things together, you put yourself in prime position to be the number one pick. And even if you lose a couple, don't be discouraged, because you will. I find the house that you win is always the right house. Emily,
it always is.
it always is. We lost a couple houses ourselves, and one I was really upset about. I was really not happy about, because we clearly,
until you found the one you own now.
and I thank God every day we lost that house, because the one we have is way cooler. Yeah. So we find that happens for our buyers as well. So, my heart and the team, the heart of our team, and I know your heart as well, Sarah, is to take great care of people, make sure they're protected, and put them in the best possible position to get a great house in this market, because it is a great time to buy. And the market is continuing to go up at a ridiculous rate right now. And that's going to slow down someday, and normal appreciation will happen of 3 to 5% a year. But man, you can get in now. The earlier you can get on that train, the better off you're going to be, because
For sure.
what we're seeing right now is just crazy. It's a wild ride that we're on. It's been fun. So any last thoughts before we take questions?
No, I think that was a good end.
Okay, perfect. So I see Alex, you're on. If you have questions, you can unmute yourself and ask. Or if Bob, I see you joined us late, Bob, and we're gonna have this. We'll email you this. The whole thing's been recorded, so you can rewatch it. But if there's any questions either one of you have, let us know, and we'll be happy to answer.
Mm-hmm.
No questions?
Come on, guys.
There he is.
Okay, I was just going to say, for me, I was just going to run down everything with my husband, and then if it's okay, just reach out to you and Emily after I speak with him.
Yeah.
Okay, great.
Yeah, and then what's your time frame, Alex?
I mean, ideally, I would like to start this process after our season's over, so in May.
Yeah.
Just because it's at the end of the season, especially with COVID, it's just been absolutely nuts, and taking on anything else right now just seems to be unbearable. But it's getting better, especially going into phase 3. So so that's kind of the timeline at least we've spoken about.
Alex and his husband run the cheer place my daughter goes to.
Oh, really? Oh, cool.
And they're legit. This is no joke cheer.
Okay.
Yeah, that's awesome. That's so cool.
Is it Javi? Javi's your husband, right?
Correct. Yeah, that's correct. Yeah.
Yeah, excellent. I mean, May's a great time. So yeah, reach out to Emily and I. We'll get you connected. Like I said, the first step is really to get connected with Sarah and get pre-approved. And I'd love to take great care of you. At least interview for that position to do that for you guys. Even if you have another lender that you've been considering, I think it's good to make sure. And then once you get that done, then we can get rocking and rolling. So it's fun. And we'll get together with a full buyer's consultation, take a deeper dive into some of the stuff that we talked about today to make sure you're prepared to buy a house. So that's awesome. Will this be your first time?
Yes. Yeah, it would.
That's so exciting, man.
That's so cool.
It's nerve-wracking as well, too, if I'm being honest.
It is.
Yeah, it is.
Yeah.
So,
everybody feels that way.
Not fun. Buying your first house, it is. It's like one of the biggest financial purchases you'll ever do in your life. But it's also a lot of fun. And Sarah and I and our team will make it as painless as possible for you.
Okay, well, I look forward to it.
Yeah. All right. Excellent. Well, thanks for being on the webinar. We appreciate it.
Absolutely. Thanks for having me, guys.
Yeah. Well, Bob, go ahead, Sarah.
No, nothing. I was just going to tell Alex that also, even if you're thinking about buying starting in May, really like starting the pre-approval process now. I feel like knowing that information automatically makes it less stressful.
Mhm.
And then you're got all your ducks in the row and you're ready to go in May, because your pre-approval doesn't expire. So with us, we're not a bank. We're privately owned mortgage company. We're not going to repo your credit. So you can just, start that and then have that information. And if it takes you 6 months or whatever, that's okay. You don't have to start the application all over or anything.
Okay, that's good to know. I actually just wrote that down because I know typically loan offers expire within 30 days or so. So that's
Yeah,
good to know.
I know it's a big misconception, but it's not the same.
Okay.
And
Mhm.
when you get pre-approved, we do a Zoom meeting. So you and your husband and I would all be on a Zoom meeting. I'd share my screen, we'd go through everything, answer all your
Okay.
questions. So it's really informative.
Awesome. Okay, I'm
Yeah.
gonna run all this stuff by him today.
Okay, cool.
Cool.
Awesome.
That sounds good. All right, Bob, you got anything for us? I'll see if I can unmute you. Oh, pardon me.
No, look forward to seeing the information you're going to be sending us.
Yeah, absolutely. It's nice to hear your voice, buddy. It's been a while.
Yeah, it's been a while.
Are you guys kicking around the idea of making a move this year?
Yeah, as we get older, we're looking for a little place that's a little easier for us to get around in. Stairs are becoming a real hassle.
Yeah.
Okay. Well, I'd love to talk with you guys about that. And any questions you have or thoughts or concerns or anything, let's unpack those and see about maybe getting into a place that doesn't have stairs anymore. I know that's been something we've been talking about for a while now. Are you there? Did I lose you?
Yeah, no, I'm here.
Okay, excellent. All right, buddy. Well, we appreciate you jumping on, and yeah, we'll make sure you get a copy of this so you can see the whole thing.
Thank you very much.
Yeah, my pleasure. All right. Well, I think that's it.
Great. Yeah, that was awesome.
Yeah, thanks for jumping on, Sarah. It's
Of course, anytime.
always fun chatting with you, and we'll blast this out, and we'll send you the link as well so you can blast it out to your folks.
Perfect.
And yeah, this is fun.
Awesome. I'm so glad we did this.
Yeah, me too. Have a great night, everybody.
All right. Bye.